up, stock compounders? Brad here. So I just saw this interview with Bill Miller from Wealthtrack's Consuelo Mack. It was recorded on December 2nd, so just 17 days ago. And Bill Miller spends about 3 minutes in this interview talking about his holding in Alibaba. And I found it very insightful. So I'm going to show you guys the full 3-minute clip from this interview with Bill Miller. And then afterwards, I'm going to kind of break down some of the pieces. All right, let's take a look.
Alibaba, just speaking of a company that has come under scrutiny in its home market in China, has been, certainly the stock price has been affected by that and regulation from the Chinese authorities. And yet you continue to own it in a fairly sizable position in it. Why?
Yeah, we bought a chunk of it when all of the stories broke about Jack Ma, and he disappeared for a while. Mm-hmm. There's still stories every day. There's a story today about the common prosperity that President Xi wants, and the new regulations for things like DD and gig workers, and all of that is real. We don't know how far that's going to go, but right now the market price, in my opinion, fully reflects that in Alibaba, for example, because it trades now about 15 times the next 12 months earnings, and we think the company's growth is going to slow, but it would be surprising to us if over the next 3 years they couldn't grow at least 15% a year, generate a lot of cash, still have a dominant market position.
How do you deal with these political uncertainties?
There's a couple aspects to that. The first one is we really try and understand, based on what we know now, about what the economic impact of those measures will have on these companies. So how will it affect their earnings growth? I mean, Alibaba was growing 25% a year, 30% a year for a long time, and now it's going to be growing a lot less than that. Mm-hmm. But again, that's now reflected in the price. And then the other part of it, might have said, or if I didn't, I should have said that since the financial crisis, people have been volatility and risk phobic, and so wherever they see perceived risk, they flee from it because of the experience of the losses in the great financial crisis, 08 and 09. So our default position is that people will overestimate perceived risk, and the real risk tends to be much less, and especially when there's a lot of headline risk about these companies. We had a big position in Facebook some years ago when Mark Zuckerberg was dragged before Congress, and we went over to see clients over in Europe, and they asked us about it, and one of the things that we said, well, what are your other managers doing? And he said, well, they're all getting rid of it. And that turned out to be, that week of it turned out to be the bottom, and then Facebook's price. So Alibaba was 300 a year ago, and now it's 120. So that come down reduces a lot of risk in that name and other names in that space. I think the concern for us would be that something would happen that happened with the education companies, where the party just turned them into nonprofits.
Shut them down.
So there you have it. Bill Miller's thoughts on Alibaba, fresh off the press as of December 2nd. So let's break out a few of these nuggets from this interview. So Bill Miller says, we bought a chunk of it when all the stories broke about Jack Ma disappearing for a while. Okay, so this right away tells me, Bill Miller is a different breed of investor, right? He's not afraid of going into something when everybody else is heading for the exits. I don't know if you guys remember this very clearly, but that whole situation around Jack Ma disappearing, there was just a lot of uncertainty, and there were a lot of people getting spooked out of Alibaba at that time. So that I found insightful. The next piece, he says Alibaba trades at 15 times next 12-month earnings. So I looked that up in Ticker just to verify that. And in the valuation tab under Alibaba, you can find next 12-month price to normalized earnings. Okay, you can see how it's trended over the last 4 or 5 quarters. Was up around 20, 21. Now it's at 13. Okay, and here you can see what I did is I broke out the last 5 years of next 12-month price to earnings for Alibaba. And you can see the average is about 26, okay, 26 times next 12 month price to earnings. Right now, like I said, it's 13.3. Okay, so it's basically half of kind of the average that it's been trading at over the last 5 years. So there's a data point for you guys. He says growth is going to slow, but it would be surprising to us if over the next 3 years they couldn't grow at least 15% per year, generating a lot of cash, still having a dominant market position. Okay, so that seems to be a lot of what investors are concerned about, right? Growth slowing. Alibaba has been such a growth juggernaut over the last, at least since, when did it IPO? So if we look at all, it looks like it IPO'd, at least on the New York Stock Exchange, in 2014. Okay, so about 7 years we've got for Alibaba. Expectations were super high right out of the gate, 46x with the next 12-month price to earnings ratio. So yeah, Bill Miller agrees. This thing is going to slow down. But the question is, how much is it going to slow down? And is the current price reasonable, assuming it slows down from, mid 20% growth rate to say 15% growth rate? And we see Bill Miller thinks, it's already built into the price, all of these concerns, particularly at a next 12-month price to earnings of 13 times. Bill says, our default position is that people will overestimate perceived risk, and the real risk tends to be much less. Okay? And this is something he said right after. Since the financial crisis, people have been volatility and risk phobic. Wherever they see perceived risk, they flee from it because of the experience of losses in the great financial crisis. So, that's what humans tend to do. They tend to not be these cold, hard, rational, calculating machines where, whatever the risk is exactly what's baked into the price. Humans tend to overshoot and undershoot by quite a bit. And when, there's this perceived risk, there's a lot of perceived risk with what's happening in China right now. Bill Miller thinks the real risk tends to be much less. And what is risk in this case anyway, right? That word is thrown around a lot. I think the risk Bill Miller is probably talking about is the risk of losing money. And he refers to the massive drop in stock price, right? It was $300 a year ago. Today it's 122, I believe, as of today, December 19th. So because the price has come down so much, that reduces a lot of the risk. If the risk is the possibility, the potential of losing money, it's really that price to value tells us what the risk is. If we can buy something for much less than what it's reasonably worth, there's a lot less risk of losing money, okay? Because, over time, the markets are generally pretty good about pricing something in alignment with what it's actually worth. So if we can buy at a very large discount with that margin of safety, we have tailwinds in terms of the market, converging that price with what the business is actually worth. And then he ends with the concern for us would be that something would happen that happened with the education companies where the party just turned them into nonprofits, right? And I don't see any real possibility of the CCP doing that with Alibaba. I guess anything is possible. But I really agree with Bill Miller here, saying that, the market price fully reflects the concerns of the market. So there's really no more. I mean, sure, the price could go down more, but with respect to what the business is likely to be trading at, what it's likely to be worth in 2, 3, 5 years, seems to me like we've got a pretty good margin of safety baked in. And again, this is not investing advice. Here's the Miller Value Partners portfolio from Ticker. You can see Alibaba is the 10th largest holding as of the end of the third quarter. And it's the only company in the top, you can see 14 here, that he added to in the third quarter of 2021. So, take that for what it's worth. It's about a 3% position, at least in respect to the equity holdings of Miller Value Partners. This certainly doesn't always reflect all of the assets that are within a fund like Miller Value Partners, but it's everything that they're required to disclose on their 13F filings. So, yeah, I thought it was interesting to hear from Bill Miller, clearly one of the greats in the value investing community. And yeah, hopefully you guys got something out of this one. And, let me know what you think of Bill Miller's comments regarding Alibaba just earlier this month, December 2021. All right, guys, I will leave it at that and see you all in the next video.